starting the presentation?
Either.
Right, yeah.
I think it's Diana.
Yeah.
Yeah. So I think we are live.
Mm-hmm.
Yes, finally. And where did Diana go?
I think she's on her way. Good morning.
Good morning. We might as well start the banter since we are live.
Yeah. Morning, everyone. Anybody?
Hi, everyone. Good morning. Good morning to those of you who made it into the Zoom room. I am aware from your emails that a lot of people struggle to get in and stay into the room. I don't know what's going on, but we are live as well. So greetings to everybody in Zoom, greetings to everybody on Facebook. Please drop us a comment and tell us where you are joining us from. Where are you? I am in Windhoek, Namibia. Lorato is in Gaborone, Botswana. Diana is in Kampala, Uganda, I believe. And good morning again. My name is Christine Rita Abankwa. I'm the founder of Secure the Bag Africa Pan-African Success Accelerators, which is a high-performance coaching platform where we bring together speakers, entrepreneurs, coaches, consultants from across the continent and also those in the diaspora. This is actually the last session of the global lockdown webinars. I want to thank everybody for watching. The views have been phenomenal, beyond what we expected. This is our 13th webinar in the series. However, in July, we will be starting another one that will run once a month. I'd like to welcome our guests for today. We are going to be talking about money. We're going to be talking about retirement planning, insurance. We're going to be talking about investments, and we're going to be talking about Black tax. We know that there is a premium on being African and employed. Your money is never just yours. It is for your entire family. I'm joined today by Lorato, Akpata, and Diana, Bagarukayo, and I would like them to introduce themselves briefly. Tell us where you are, what you're passionate about, and let's get started. Lorato, would you like to start?
Yes, I am. Hello, everyone. Good morning. Happy Saturday morning. I'm Lorato Akpata. I'm a personal finance coach and an accountant. I run a company called Suero Consulting. We do personal finance training as well as accounting for small businesses. We're located in Botswana, Gaborone, the capital city of Botswana. So yeah, that's what I do, and I'm looking forward to making a presentation today.
Thank you, Lorato. Diana, please tell us about yourself.
Good morning, everybody. My name is Diana Bagarukayo. Happy to be here again. I'm an economist by training. I work for the World Bank as an education specialist, but I'm passionate about finance. So I do personal financing, financial coaching. In addition, I'm a co-founder of an organization called Phenomenal Women that aims to build the capacity of women of color. Thank you very much. That's who I am.
Thank you so much, Lorato and Diana. Diana, you are starting off today's presentation, and I'd like to give you the floor.
Thank you very much. I'm going to do a PowerPoint. So let me share my screen. Okay, great. I hope everyone can see it. I'm putting it in full view.
Yes,
well.
We can see it. Okay. Thank you.
Great. So today we're going to talk about a number of things, and I'm going to share about investment and retirement. Very excited to be here. This is a follow-up conversation to the finance presentation that we had earlier. So in case people haven't caught up with that or seen that, please go to the Secure the Bag pages and look at the earlier finance presentations, because today we're really just building on and going a bit in depth. I've already introduced myself, so I'll not go through that again, but probably will say something at the end. So let's talk about money. Today we're here to talk about money. We're here to talk about our finances, investment, savings, retirement, you know. And when we begin to talk about money, there are 4 critical things that we need to look at when we're managing our money. And the first thing is to widen our income sources. So if we want to live a certain lifestyle, or if we have obligations to meet, one of the things that is critical is to ensure that we widen our income sources and have a number of streams of income that contribute to our lifestyle. If you want to improve your lifestyle, another thing that you need to do or could do is to cut down unnecessary expenditure. So keep your budget to the things that you need now, so that you're able to save for investment, but also save for a rainy day. So today we're going to talk about investment. We talked about the other areas in a previous conversation. So I want to focus my presentation on investing your money. And why should we invest? Why should we invest our money? When you look at the commitments you have today, many of us have to pay school fees. We could be renting our house, so we have housing costs, either for rent or for utilities, water, electricity. We want to travel, whether it's, you know, professional travel or whether it's leisure or commitments you have to make. We need money for our health insurance, different aspects. If you fall sick, you need to pay your bills. So you need to grow your money in order to meet today's commitments. And these are just a few examples. But at the same time, when I think about tomorrow, and tomorrow could be 10, 15, 20 years from now, or 30 years from now, tomorrow we'll probably still have the same commitments. We'll probably still need to pay for housing, whether it's paying for your bills, if you're renting an apartment or something. We'll still want to travel in 10 to 30 years from now. We'll still have to buy food, which is an essential. We'll still need to pay for health. So whether you are looking at today or tomorrow, it's important for you to grow your money so that you have money for both periods. And I want to just look at the time question, because many times we feel that we spend most of our life working, and so many people have different perceptions of why should I save money for the future when the future is not guaranteed. But I looked at the time that we have here on earth, you know, if you're blessed with life. And if you graduate when you're 21 years old and work, you know, whether it's 21, 22, around the time you finish your education, and probably work until 55 or 60, it differs in different countries. If you do the math, you would have spent about 40 years in active work, whether it's active employment or actively running a business, whichever area you're in. But your work or your active years from about 20 to 60 till you retire are about 40 years. And many people think that's the majority of the time. But then when we go ahead and look at our retirement time, if say you retire at 55 years and God blesses you, you're blessed with good health and long life, and you live till 95, as we're seeing many people these days, that means you also have 40 years of retirement. So the retirement years are almost the same as the active years. So when we're looking at what should we prioritize, saving for now or saving for the future, spending my money now or spending it later, I thought this is an important thing to look at, the time question. your active work is almost as long as your retirement. And the reason why many times they say, and statistics say, that people either pass on soon after retirement, many times is because they've not prepared mentally and financially for the retirement. But if we prepare for the 40 years now and the 40 years later, I think we can thrive. So just keep that at the back of your mind, that many times our work years are almost the same as our retirement years. So why should we invest? Again, I ask the question. And I say invest because today and the future need money. So you need money now, you need money later. So let's go ahead and look at how do we grow our money and what are the available options. And I've shared this before, but I think this is a very important slide that shows what I think are some of the investment opportunities that exist. And if you have any investment opportunities that you think exist that are not on this slide, please send us a message. Please just send us a text or Zoom message so that we can add those and learn from you. But these are the investment opportunities that I feel currently exist. So we have real estate, and real estate could run from land to commercial buildings to residential housing. All that is available. And all that is an area where you can invest some of your money now and it will give you a return, so it will grow. If you buy a piece of land today, given the population growth, given the way the cities are growing and expanding to the countryside, the price of that land is bound to go up in 2 to 3 years. So land is an area for you to invest in. Similarly, putting up a commercial building, if you add value to land that you have and put up a commercial or residential housing, which you can either rent or sell, that is also an area that you can invest in. So I've just listed down a whole lot of ideas, investment opportunities. But what I want to say is that we should never fear to invest. The critical question which comes up many times is, I can't invest, I don't have any money to invest. But if you follow the cycle of whatever money that you have, put some aside and save it. Save it for investment. So if you earn, or if you have $1,000 and you can live within $500, keep the $500, save it and invest it in something. And these are the range of investments. So in order to have money to invest, you also need to accumulate some savings. Yes, many times you can borrow, but it's important for you to also accumulate savings so that you can invest now and then grow your money. So this is the list that I've shared. And when you think about investment, think about it at your level. And I've shared this many times. If you're looking at housing and I say, you know, you're going to build a house or you're saving to invest in housing, housing to you may not be a block of apartments, or housing to you may not be a 10-acre real estate. Housing to you may start with your simple one room. Housing to you may start with a simple unit that you build. And then once that generates money, or if you sell that, you then move on to build another unit and another unit. So don't be threatened or fear to invest. Invest at the level that you are now, but all these opportunities are there. So real estate is an opportunity, is an area to invest in. Shares, you can buy shares in a number of countries, in a number of companies. If you go to your security, if you see which companies are floating their shares, you can look at those. You need to study and see how is the share price. You know, there's always that boring page at the back of the newspaper that has arrows up and down. So study and see which companies are stable. How are the prices of the shares changing? Which one do you want to invest? If a new company opens up, there's always an IPO, which you can then, you know, as an initial buyer, just go in and invest in some of these companies. Then there are securities, and the securities are government securities where you're lending money to the government in form of treasury bills and bonds. The difference here is a lot on the duration. So the longer the duration is that you've lent government your money, then the higher interest rate that you get. So depending on how much money you have to invest and how long you want to keep it there, you can also look at treasury bills and bonds. And all these differ with countries in terms of the interest rates. So I'll not really say what the interest rates are now, but they could range from 10 to almost 15%. Talk to your bank and check and see what the interest rates are in your country. An interesting thing that we have here, particularly in Uganda, are unit trusts. Unit trusts, for now, many of the insurance companies are running this package where, again, you save with them and they invest your money for you. The difference with unit trusts here, in comparison to treasury bills or bonds, you can easily pull your money out at any point and it won't make a loss because it gains interest. So it gains interest on a daily basis. Fixed deposit, fix some of your money. If you have saved some money, fix it in a fixed deposit. And you can do this by fixing it in your bank or in any other bank. Have a look at the interest rates, ask them, what do you give me per annum if I fix my money with you? So that's one of the avenues where you can grow your money. Money markets, many people are investing in Forex trading. Personally, I haven't invested in this one, but I think it's an avenue that you can explore where you make money based on the exchange gain. So these are the ones that I've listed. Some of them are passive investment opportunities, but they are out there for you to grow your money. But also one of the ways in which you can grow your money is by actually engaging in a business. And if you're not fully employed 8 to 5 and you have the time, or you can invest with people and partners, I think business is one fast way of growing your money. And there are a number of sectors that you can do that. You can do it in agriculture, you can go into industry and manufacturing, you can look at tourism, you can look at value addition. If you buy tomatoes from farmers, simply put them in a can and sell it as a canned produce. So there's opportunity to add value to a number of produce. Also money lending. These days, that seems to be one of the most profitable, at least here in Uganda, where you can get up to a 50% return on your money. So money lending is an opportunity if you're doing it within a company or with a group to lend people money and then get a return on that. Consulting, and again, consulting, similar to business, is an area where you can invest. Many firms these days are looking for partners. They're looking for people to invest in their consulting firms, whether as an active partner or a silent partner, and again, have an opportunity for your income or your money to grow. So those are just a list of investment opportunities. Please go through them, look at them, and find out in your country which ones are best, because I know we're talking to a global audience here. Now, some things to consider before you invest. I've listed a few things here. Before you invest, as I said earlier, look at the resources, look at the money that you have. So if you don't have $1 million in your pocket, then of course you can't do $1 million investment if you're looking at investing your own resources. But at the same time, you can also look at getting credit. So these days, there are lots of banks, development banks, that can give you credit. They can give you a certain percentage of money for you to then go and invest. So if you have an agriculture project or a business idea that you want to do, you can then go to some of these development banks, borrow some money, give them a clear plan of how you're going to pay back and what the expected returns are. Some of them will actually come up on board as partners, and that will then give you money to invest and grow your money. So before you invest, consider what resources you have, whether it's your own or whether you're looking at partnership or whether you're looking at credit. Before you invest, consider the environment around you. So what is around you? As I said, we're talking to a global audience here. So what's happening in Uganda is not the same as what's happening in South Africa. It's not the same as what's happening in Geneva, in the UK. So look at what is happening around you. For example, in Uganda now, if you're looking at real estate, our population is young. We have most of the majority of the population is below the age of 30. So we have many people that are graduating, that are finishing school, that are looking for housing. They're looking to move out of their parents' or village home, but they need cheap and affordable housing. So for Uganda now, cheap, affordable housing is trending. You know, that's an area to invest in, but that might not be the same in your country. So look at your country, read the paper. I always say it's important for you to read the paper. In the morning when I wake up, I read the paper and see what's happening, see what's trending, see what laws are happening, what the government is doing, because that will inform your choice of investment. Before you invest, consider your risk appetite. So many of us are risk adverse. We don't want something, we can't do something that is really risky, where we're not sure of our returns or where we could lose money. I know that most of the money is made in more risky ventures, but look at your risk appetite, because you might be risk adverse, you might have a high risk appetite. Some of the investment options that I gave are more risky than others, and they have a lower return because the ones that have a lower return also have you're less risk adverse. Look at your return on investment, and that's critical. Before you invest, try and see, is it a 10% investment return? Is it 20? Is it 30? Is it 50? Because many times I hear people say, oh, I invested my money with this group, and at the end of the day, they just gave me a 3% return on my investment. So you need to look at what is your return on investment and go in knowingly. Know that I'm investing $1,000, and at the end of the year, I'm going to get $100 only. So don't feel cheated, but know what your return on investment is. Before you consider investment, look at the people who you want to invest in, whether you're going alone or you're partnering with people or you're looking at investment groups. These days, there are a lot of savings and credit organizations as well that are doing investment. So look and see who is doing investment, who is out there, and where should I go? Also look at the time management. So how much time do you have to manage your investment portfolio? Depending on the time you have, you'll be careful about what investments you pick up. If you don't have time to engage in a business, then you need to pick up more passive investments, things that don't require too much of your time if you're the one going to be actively engaged in that. If you're partnering with other people, then that's fine. But look at the time that you have. Another thing to consider before you invest or when you're investing is stability. So first of all, look at the economy. How stable is it? Many times either the dollar rate is fluctuating or employment is moving up and down. So the sector that you're investing in and the country that you're in, look at how the economy is going. But also look at the political situation. And this is really applicable, especially for us in Africa, where we've had a lot of political instability. If your country is going through an elections and you don't see a smooth transition, or if there's a lot of violence and political instability, then maybe you should look at investing elsewhere until it's stable in your country. So these are the things to consider, but remember that it's a global village. You can invest in your country, you can invest in other countries. Just be sure to know the opportunities and the laws that are available. Okay, so as we said, you need to plan for your retirement because your working years and your retirement years are almost the same, if you have good health and you have life. So I just wanted to put the slide here to tell you to plan for your retirement. And how do you do that now? These are a few tips because we can't say everything now, but start preparing now. So the time to plan for your retirement is now. It's not when you retire. So start putting money aside, start growing your money and investing for tomorrow. What can you do to plan for your retirement well? Work well, leave a mark. Because where you are now, whether it's in a job or in a business, the world is so small. If you have 40 more years of life, you're going to definitely interact with the people who you're interacting with now. So work well so that they remember you, so that they call you. Many times people retire and then go into consulting. Who is going to call you to consult with them if you didn't leave a mark, if you didn't leave an impression, if you didn't connect with them? So as you plan for your retirement, my advice is work well, develop hobbies. I've met people who have worked in organizations, and when they leave formal employment, they don't know what to do. You know, that's why many times people either die or go into depression because they don't know what to do. So develop hobbies now. Find things that you're passionate about and do them. Do them not for money, but do them because you're passionate. If you're passionate about speaking, speak. If you're passionate about gardening, start gardening. Don't wait until you're 60 to start then. Experiment your business early. So many times you see people retire and then they start a business. They start doing farming. They start running a business, and they don't have enough exposure in that area. They don't have enough experience. They don't have the same energy. The energy you have in your 20s is not the energy that you have in your 60s. So begin to experiment on, possible businesses that you might be interested in doing. Experiment now while you have some resources, while you have some energy. Keep your friends, keep your networks, because you'll need them when you retire. I think that one is obvious. If you're a member of a Rotary, if you're a member of certain fraternities, keep your friends and keep that network. Leave a legacy. Don't just go through life, but leave a legacy, because that's what you'll be remembered for. You might be an executive director in a company now, but in 10 years, we may not remember that. But if you did something, if you behaved in a certain way, then you will always be remembered for that. And that will be something that you also leave for your children and your grandchildren. I also believe that we never actually retire. We simply transit. So I don't believe in retirement. I think you transit from either formal employment to self-employment. You transit from working 8 to 5 to working part-time. So don't get into a depression that you're going to retire or you're getting into retirement. It's just a second phase of life. As we said, 40 years is work, 40 years is retirement. So it's a different phase. But another thing that's important is for you to discover and fulfill your purpose. So before you slow down, there's something that God has put into your heart. There's a purpose that you were put here to do. So please discover your purpose and fulfill your purpose. Don't leave this earth without fulfilling the reason why you're here. So these are just a few tips for you to plan for your retirement. Is it too late? Many times you listen to motivational speakers or financial coaches speaking, and you think, oh my God, it's too late for me. I haven't saved, I haven't invested, I'm already retired. Is it too late to plan for investment or to plan for retirement? And my answer is no. And I'm always motivated by KFC, by the owner of KFC, Sanders, because his life started later. Before 40 years, he was hustling. He was just hustling it out. But his life started almost at 40. So at 40 is when he became a chef. I think he went and did training and became a chef at 40. And then he started a restaurant at 40. And it's not until 62 that he franchised it into KFC. And this became a hit. All of us eat KFC now. We go to KFC. He sold it at 75 and he died at 90. So he had, imagine, between the age of 40. So at 40 is when he said, oh, let me go and study a cooking course at the age of 40. And that worked for him until the age of 90. So he had 50 years in serving and working in an area. So it's never too late. Be encouraged by the KFC story. And there are lots of other stories. If you haven't invested, if you haven't planned for your retirement, if you're already retired, it's okay. It's not too late. I want to leave you some homework as I begin to wind down. My first homework, or my first call to you, is for you to manage your finances better. We have our whole life ahead of us. Don't be caught up in consuming now. Don't be caught up in the day-to-day, the show, the competition with your peers. Don't be caught up in all that. Save for today, save for tomorrow. But that doesn't stop you from living for today and tomorrow. So enjoy your life. Life is a journey. Invest now. The best time to grow a tree is now. So invest now, start now. It's never too late. Plan for your retirement now. Don't plan for your retirement when you're 60. plan for it now. If you're in your 20s, 30s, 40s, 50s, however old you are, plan for it now. It's never too late to start over, as we've seen. But I also want to encourage you to dream again. You know, the dream is never lost. So whichever stage you're at, it's an opportunity to dream. In the Bible, I just want to throw this in there. We're told that the verse says that I know the plans I have for you, plans for you to prosper, plans for you to succeed. So they're positive things that we need to do. The future is bright. And I want to encourage you to dream again. I'm the author of a book called Dream It Possible. And I run a 4 weeks mastermind. So if your plan for life is not clear, I encourage you to sign up for my mastermind. It's 4 weeks. We spend 1.5 hours a day talking and drawing up a clear plan for you to evaluate where you are now and where you need to be. The advantage with doing the mastermind is it will also help you establish networks, and you get advice from me and a number of financial coaches on planning your life. So if you're interested in doing that mastermind, please sign up, and the contacts are there, africa@phenomenalwomenglobal.com. Just to end as well, as I introduced myself earlier, I'm a co-founder of the organization Phenomenal Women Global. It's a not-for-profit organization based in Switzerland and Uganda. We have focal points in the US, in the UK, in Zimbabwe, in South Africa, and now in France. Phenomenal Women is there to empower women and girls and to support you professionally as you grow and develop leadership skills. So we have annual conferences all over the world in these countries. We do mentoring and coaching. We also have a scholarship program. So just to encourage you to hook up with us, like our pages, become a member as an individual, as an organization, so that we can work together, support women, encourage and grow together. This is particularly, it's open for everybody, both men and both women and men who support women. And we're particularly looking to support women of color and of African descent. So those are my contacts. If you want to hook up to Phenomenal Women Global, please check out our website, our Facebook page. The email is there, and you can contact me by phone or by WhatsApp. So thank you very much. That was really just a highlight of investment and retirement. And over to you, Christine and Lorato. Thank you very much.
Thank you. Thank you so much, Diana, for your presentation. Yes.
Diana.
Thank you. That was great. And you know, one of the biggest take homes for me was don't stop dreaming. Don't stop dreaming, because there's a tendency for us to believe that when you reach a certain age, it's over. You just need to go with the flow and accept what life brings you. And you're really emphasizing that even as you plan for your retirement, plan for your dreams, because these days we live longer and you could spend many more years in retirement than you expect. Thank you so much. Lorato, I'd like to hand over to you.
All right, thank you. So yes, I'm going to be making my presentation using a PowerPoint as well. Good morning, everyone. Anybody that just joined in, good morning. I'm Lorato Akpata. I'm going to be presenting on insurance and black tax. So it's going to be quite an interesting one, especially on insurance. So no, black tax actually. So I can't wait to share this with you. All right, so welcome to my presentation. I'm Lorato Akpata. Like I said, I run a company called Suero Consulting. Suero Consulting, it's actually an accounting firm that we also offer accounting services for small businesses. We help them with your bookkeeping, your financial statements. These are also your monthly management accounts, business advisory, as well as tax advisory. So what we also do is personal finance training and coaching for individuals. The training is mainly for corporates, where we actually train employees on personal finances. Such a crucial subject, particularly in this day and life, which we feel At times it's mostly ignored and not paid attention to, but it's actually quite a subject that is critical in people's lives. So I am an accountant by profession. I'm also a personal finance coach. I'm very passionate about helping people get their lives right. So at Suero Consulting, what we actually do there, we support you, we help you to achieve your goals, we help you with your personal finances. And when you leave Suero Consulting, you should be feeling good about yourself so that you can take over the world. So today's topics that I'll be sharing about will be insurance and black tax. Our very first one will be insurance. Basically, insurance all the time, that different types of insurances. I will be sharing on the different types, but I must stress a point that when you are in any type of insurance or you want to insure anything, it should always be aligned to your needs. Your life needs, looking at your structure of your family, or you don't have a family, it should always be aligned to your needs and the time that you are in your life. So there are different types of insurance. There is life insurance as well as short-term insurance. I'm going to be starting with the short-term insurance. What is short-term insurance? Basically, this is just insurance that provides financial coverage for a specific asset for a limited duration of time. Normally, usually less than 1 year, but some they do take more than 1 year. For instance, your car coverage, they can take more than 1 year. I will give you other examples. For example, as you may get a short-term property insurance policy that only possibly covers your property for 6 months. You can also examples of short-term insurance will be goods on transit. Let's say you are a business that actually brings goods into the country or buys furniture outside the country and then you want to sell it in your country, or whatever that you do, you can actually have insurance on that because that is short term, because it's only for that limited time when the goods are on transit. As well as when you're importing goods or you're importing food, whatever that you're importing, they have to be insured. Whatever that you're importing into your country, or you are actually not even necessarily importing, or you're just transporting goods, they have to be insured. And you'll find that when you do that, it's actually quite short term. You'll find out it's just for a week or 2 weeks that the goods are traveling. So that is what you call short term insurance. Another short-term type of short-term insurance would be, for instance, for your assets, such as your home, that is actually falls under short-term insurance, as well as your car. For example, your home being your house, as well as possibly your TVs, your furniture, and all that. That is also short-term insurance. Your car is your short-term insurance. You can actually insure your computers, etc. That stuff that is short-term, that falls under short-term insurance. As well as there's an insurance called retrenchment insurance, which is quite pertinent in these times because when you actually get your loan or your personal loan or whatever that kind of loan that you be getting from the bank, it would be good to also just cover that with a retrenchment insurance in case you lose your job through retrenchments, because companies are really not doing well. And also companies are just moving towards tech nowadays, so they actually get retrenching employees. So it'd be good for you to have retrenchment insurance so that when you get retrenched, the insurance can actually at least give you some bit of an income every single month for a certain period of time. All right. And we also have life insurance. All right. That's another type of insurance. Basically, this is just a contract between the insurer and the policyholder. The policyholder will be you, the client, which the insurer guarantees payment of a death benefit to a named beneficiaries when the insurer dies. This is when you die, which this one will probably be applicable in your life if you actually have children. We do have experiences. I do have experiences where a client will have life insurance, but they don't even have children. We will be talking about where you need to be able to understand where you are in your life. And if an agent or a broker comes to you and offers you different types of insurances for you, you need to be able to say, no, that doesn't suit my life, or yes, this suits my life right now. You need to be able to be conscious of the decisions that you make when it comes to your insurance covers. Do I really need this kind of cover in my life right now? Do I need this kind of expense in my life right now? Because remember, as much as it's an insurance and it covers you, it's still an expense coming out of your budget. So you need to be able to be sure of the decisions of your life, or be conscious of what you actually need at that particular time. So if you do not have children, and you don't have necessarily any people that are depending on you very close, you do not necessarily need life insurance. When you start having a family, you have a husband or you have children, you'll probably need life insurance to cover your children when you die, or your spouse. All right. So basically here, the insurance company promises a death benefit in exchange for premiums paid by the policy holder. The premiums are basically your monthly payments that you're going to be making. All right. So there are examples of different types of life insurance, by the way. If you actually you have an insurance company and you actually engage them on this, though, they have even certain names for them. But I'll just give you an example of them. For example, there is life insurance to cover your family expenses when you die. There's also life insurance to cover your mortgage for in case you die. Now, this one, I need to stress a point on this one, because this is quite a popular one where a lot of people would use life insurance against their mortgages. So when they die, their houses are paid off. And forget that your children, as much as their house will be paid off, your children or your spouse will also need to eat when you die. So do not try by all means not to only have life insurance against your mortgage only. What you can do is you can probably get another life insurance that will now cover your family expenses. You'd like them to also maintain at least the same lifestyle post your death. Not only have this mansion that you've built for them, but they can't eat when they're in the mansion. And what's going to end up happening? Probably sell that mansion in the end if you actually don't leave anything for them to eat and continue living the lifestyle that they have been living, at least to the bare minimum. And as well as possibly have their education still covered, etc. So it will really depend on how much your life insurance is. So may I kindly just remind you that if you have your life insurance attached to your mortgage, please remember that you can get another one to cover your life expenses, your children's life expenses or your spouse's life expenses when you die. Another thing that I would also advise when you get a life insurance, whoever that you are you're insuring with, whichever insurer that you're insuring, kindly ask if you could get your money back before you die. There are some policies, for example, you can actually have a policy where there's some insurance that offer your at least half of your premiums back after a certain number of years, because maybe they looks like you're not going to die, so therefore we can have a certain portion of your premiums back. I would really advise for those type of life insurance policies for you. So those are the kind of nitty-gritties that you should look at when you actually look at life insurance for your family. Another type of life insurance is to cover your funeral expenses. Those funeral policies that you're always getting for your families, that falls under life insurance. And another one with that one as well, when you actually go and get a funeral policy, please do ask all the questions that necessary. How much is my family going to gain when I die? How many of us can actually have a funeral policy against this person, or whoever that you are doing a funeral policy for yourself or for your husband or for your mom or whoever. Just make sure you understand how much you will be getting if you've covered your mother, and can 10 of you cover your mother and each of you get your money's worth. So because sometimes this is not communicated and people get disappointed. All right. And another type of life insurance that a lot of people don't know about is actually a disability cover. The disability cover is for when in case you get disabled, let's say maybe you have an accident or whatever that might happen to you, or you get sick. There's a disability cover for you. You will be still be able to get your salary or an amount that matches your income when you actually get disabled. That is another type. It falls under life insurance, not short-term insurance. So we do have investments that are insurance-based. These are actually quite popular, and they may look like it's a normal investment, but these are not normal investments. They're insurance-based. What are examples of those? Normally those will be offered by an insurance company. Those kind of investments. First of all, the insurance company will be offering those investments. Just know that they're definitely insurance based, and they'll name them. They have different names for them, but most of them will say, yeah, we're offering you an education policy for your kids that would only lapse after 10 years. There's an agent coming to you selling you these policies, or I have an investment policy for you. After 10 years, you'll get so much and stuff. So what I would really make you understand about these type of insurance policies is that you will only get your money when the policy elapses, or after a very certain time. Let's say maybe the policy is 10 years. Maybe you'll probably get half or a quarter of your money after 5 years, or you get all your money only after 10 years. And what normally happens, very popular and here I know, is that you'll find out the customer actually has no idea how this works. We're not reading our policies and actually understanding what these policies mean. When an agent comes and sells it to you and say, this is education for your children, let's say maybe after 3 years you need your money, you've invested probably over 30,000 over 3 years. When you want your money, you're like, you know what, if there's an emergency, I need my money. What you don't know is when you actually terminate that policy, you lose all your money, and you will probably get like $200 from 30,000, for instance. So you need to be very careful, be very informed when you actually get into this type of investments that are insurance based. All right, they will be offered by insurance companies most of the time, and they're very long-term policies, and they're normally called policies versus investments. They'll have something, they'll call themselves investment, but it will also be a policy at the end. So those are insurance based, and normally the termination clauses are very, very cruel. You will not be getting your money anytime soon until after the policy elapses. So please read the termination clauses. Please read your policy. Be very thorough about your policy. Understand what it says. When is it terminating? How can I if I terminate, what happens? Okay, you need to be very, very, very careful with that and read every single part of it and understand that if I'm going to be investing 1,000 pula or $1,000 a month on this, I'm only going to get my money after 10 years. All right. So this is what is different with it as compared to other investments where you'll be just charged a small fee. These ones, you literally lose almost all your money if you terminate before time. They're also basically, like I mentioned, they're different because of access to your money. You will not have easy access to your money. They're also good. They do have an advantage of it. The advantage of it is that the discipline is you will not have access to your money until it terminates, which is a good thing about it, because then you will have the discipline of not being tempted to use the money. But life does happen. Sometimes you do need access to your savings. All right. So we're done with that one. And then I wanted to now talk to you about insurance agents who will come to you selling insurance to you, any type of insurance, including the investment that they'll be offering, investment policies that they'll be offering. These are the questions to ask them. All right, because sometimes they don't share information with you because they just want to sell the policy. So you need to be responsible for yourself as well and say, what am I getting myself into? So ask the questions, read your policies. The policies are very long. I know that it's very long with the lingo that you don't understand. If you do not understand, get the financial advisor to help you. Go to the agent to explain to you what this means and fully understand what you're signing for before you sign anything. Now, these are the questions to ask insurance agents. How much is the premium per month or per year? All right, those are the questions to ask them. How much am I going to be paying per month? Or if I want to pay for the whole year, how much will it be? And when they tell you, you ask them, can you please show me on the policy that's where it's written. How much is your fee? By the way, as an insurance agent, when they're coming to sell you this insurance, they are gaining something from it, commission, which will probably be the first 3 or 5 years you'll be paying the commission. So you will need to understand how much are you paying this agent. Please ask them so that you are aware. Okay. What is their role? Ask them what their role is. Fine, you're my insurance agent. You're my insurance agent. You are selling me this insurance. What is your role besides you selling me the insurance? What is your role for the whole term of me being insured here? They do have that role because you are paying them a fee. The fee is not for them to just sign you in. The fee is to maintain the relationship. If you have any problems claiming your insurance, if you have any problems with the insurer, they should be able to help you with everything because you are paying them monthly. So ask them what their role is, and when you ask them these questions, how much their fees and when their role, they should show you those things on the policy that they want you to sign so that you see them in black and white. Okay, thoroughly read the policy on your own, besides with the agent. On your own, thoroughly understand it. If you do not understand it, go back to them for them to explain. If you're still not hearing them, you can come to us, financial advisors. This is what they are for, or ask a lawyer to help you read and understand the lingo that they have written there. All right. Also, one of the roles of insurance agents is that what will happen, for instance, if you have insured your car, right? You've bought your car for 100,000 and you've insured your car immediately. Next, in a couple of years, your actually not even in a couple of years, your car loses value with time. What is supposed to happen with that is that even when you've insured your car for 100,000, after 3 years you have an accident, they are not going to give you 100,000 because the car has lost value. So they need to also adjust your premiums according to the value of the car. So you also need to be able to make sure that your car gets valued and the premiums get reduced to the amount that you're supposed to be paying after 3 years as compared to the time that you insured it when it was 100,000. And this is something that many people do not know. This is the role of your broker or your agent. They're supposed to be helping you to adjust the premiums that you are paying monthly on an asset that has actually reduced in value, and you should be reducing the premiums as well. As well as it can happen that you're actually a really good payer. Every month you are paying, but you haven't claimed yet. You should have benefits to that as well because you're such a good payer. They should be able to adjust your premiums accordingly because you're not high risk. So what these guys also normally look at, this is why they will ask you how old you are you married, what do you do, your lifestyle and all that. When they're busy measuring your risk, okay, is this person going to claim anytime soon? So if you're not high risk as well and they're observing that you're not claiming too much, your premiums should more or less get adjusted to a lower premium because you are not high risk. All right. So those are the roles of the agents as well as the broker. So you should put them to task because you will be paying them for a while for them to be maintaining that contract. Okay. Now we are going to get into black tax. So black tax, what is black tax for those who do not know what black tax is? Basically, according to the Urban Dictionary, is the extra money that black professionals are expected to give every month to support the less fortunate family and extended families. This is what the dictionary actually says. So basically, it's just the money that you have to give your extended family because they need it or they don't need it. Sometimes they actually don't need it. And I know parents who don't need the money and still expect their kids to give them a certain money every month because they've raised them, because they've paid school fees for them. They say to you, I've raised you, therefore I made you what you are, therefore please give us some money as well every month. So that is also still black tax because you will find out some parents do it even when they don't need the money, but they will make sure you pay them. They make you feel bad for raising you. So those are the things that we're going to be discussing today, black tax. All right. Now, how can we manage black tax? as a person, if you actually have you have to support your extended family, or you are supporting your extended family, whether you have to or not, what I would advise you is that budget only what you can afford. All right, try not to cover as many extended family members. Cover the ones that are very close, like for example, your mother and your dad, or maybe your siblings. As for the extended ones, only when you can. They are not your responsibility. But even your siblings are not necessarily your responsibility. But because they are our family, and in the African culture, you cannot abandon your family members, you cannot abandon your siblings. What I normally advise my clients with, that type of setup, if you have siblings that are actually very dependent on you, or they're not making a plan about their lives, they're just going to be sitting home and they just want you to be taking care of them, I would rather say, instead of giving them money monthly, rather empower them to be self-sustainable. How do you do that? Possibly help them to do a course of some sort that they can enhance themselves and get a job. Or maybe actually you'll find out other siblings, they just not very much gifted education wise, but they're gifted in other areas such as their hands. They know how to use their hands very well. Empower them in that particular area. Maybe open a certain little company for them to run it, and then you can employ them in it, or they can run that company themselves. Just empower them and show them their skills and what they're actually good at, so that they can self-sustain themselves. Sometimes people are actually stuck because they are not gifted education wise, whatever our education system. You know how our education system is. If you don't know maths, if you don't know physics, if you don't know your sciences, you are not clever. That is how our system is. When you're actually very gifted in your hands and you can make furniture, you are gifted in this and you're gifted in that, you end up feeling doomed and discouraged. So what I can advise you, as a person who is taking care of those ones who are like, please, everybody is talented, everybody has a talent that they can actually use for themselves and self-sustain themselves. Kindly try and encourage it and nurture that about them, and actually motivate them to go into what they are good at, especially if they are good at carpentry, if they're good with their hands, or they're good at cooking. Maybe possibly open a little company for them so that they can self-sustain. Give them the idea of how they can self-sustain themselves, sell furniture, fund them in that area, because eventually they can feed themselves and feed their own families, and also just give integrity to themselves. Instead of you keep giving them money, it doesn't help them in the process, because then they are not feeling confident about themselves. All right, so that's what I normally encourage. And then with your parents, if you have parents that are really totally dependent on you, and they do not have any source of income, or their source of income is very little, what I would advise as well, if you can afford it, put them under your medical aid. Because then when it's like that, you are able to have them have access to good hospitals or good medical attention without you having to stress about them too much. You know that, okay, if my mother or my dad is not well, I can take them to a good private hospital because you put them under your medical aid. It kind of gives you peace of mind as well. But if your parents can afford it and they have a proper retirement package or retirement money that they're getting, encourage them to get into medical aid as well, so that they're covered in case of illnesses that will come with with being elderly, basically. All right, another thing that you can also do and help your unretired. Let's say you have parents that are not retired yet. Help them plan well for their retirement. Who is going to take care of them? Have their medical aid is sorted as well. Make sure they're comfortable where they are. Maybe make sure you hire somebody to be able to take care of them where they are, because our parents most of the time, they don't even like leaving their homes anyway. As much as older, even if they get older, they do not like leaving their homes. So try and arrange a way that they can still stay in their homes but still be taken care of. All right. So what you can do with that, possibly hire I don't know, you can actually possibly hire a nurse for them that can probably take care of them, or hire a helper, or that aunt or whoever, or that sister that possibly is not doing anything, like you're saying, we can actually hire her, and then you guys contribute as siblings to be the one that is taking care of the parents at home. So they do have their roles as well for those ones that are not doing much with their lives, right? Or you can actually hire a nurse that can take care of your parents on your behalf. Um, Also try and see how you can arrange a home-based care for them for as they're getting older, because you might find out that they still don't want to leave their homes, or your home is not big enough to also accommodate them because you have quite a big family. So you can arrange the home-based care. Home-based care is actually getting that nurse for them. All right. So how do you avoid it? So what I normally say is, as much as now we have the our parents or our extended family members depending on us, we need to break the curse. We need to break the cycle. How can we break the cycle? Starting with us. So how do we do it? We make sure we do not end up making our kids take care of us. All right. When we actually don't make our kids take care of us, that means we need to plan properly. We need to plan financially. And our children, I don't know if you've realized, guys, I mean, if you have children, the children of nowadays, they will tell you, Mom, it is your responsibility to take care of me, but it's not my responsibility to take care of you. So you better get your life in order. They will even tell you this. And these children, they're not going to be here. They're not going to be taking care of us the way that we are taking care of our kids, our parents. So please make sure you get that in order, because these ones are going to be holding us accountable. So I would plan well if I were you as well. And you also don't want to be burdening your kids anyway. Where am I going to live? Those are the things that you plan. Where am I going to live? Old age home or home-based care? We are in an era where you need to be able to know that, okay, I don't want to bother my kids. Your kids should be able to live in Australia if they want. So you should be planning for your life. Okay, they're going to live in Australia. I'll then organize a home-based care for myself in South Africa or whatever, or I'll organize myself a home-based care myself. Try and make sure that we have a nurse in place that will take care of us and will cook for us when we are actually elderly. And so that what, your children want to go live in the UK, so we don't have to burden them having to come back home and take care of us when they have their life to live. Ensure that there are funds to take care of you. That goes through savings, like Diana was talking about retirement planning. That's a kind of part of retirement planning. Is not only having a pension, but it's also how other streams of income. When you've made proper investments for your life, property, and everything, when you are actually living at that particular age now, you have so many streams of income coming in from property, from your other compound interest. Investments. You're just chilling, you're just relaxed, everything is just going well for you, because guess what, you have planned properly, and the sooner you do it, the better for you, and the less expensive it becomes for you to pay or invest. All right, write a living will. This is another thing that, actually, no, let me get into this one first. Ensure there are funds to bury you. These are obviously the funeral policies, or you save up to ensure that there are funds that will bury you when you die. Also, another thing that I will also stress, write a living will for in case you are not able to take care of yourself while you're still living. It happens that you reach an age, or it happens that you may reach a stage where you're not able to speak for yourself, but you have a life going on around you. You have investments going on around you. You need to be able to say, guys, in case I'm not able to speak for myself, this will be my power of attorney. This will be the person that will take care of my investments, to take care of me. I'll give an example with my mother. This is what happened with my mom. My mom has dementia. It's also called Alzheimer's. Basically, what happened there, I think by the age of 67, 65, 67, my mom started just forgetting everything. This is somebody who is very organized, had her taxes, knew how to take care of her taxes, had her investments going, her royalties, because she was also very organized financially. So suddenly my mom doesn't know how to manage those things, because that's how bad Alzheimer's hits you. So, my mom didn't have a living will. She didn't actually write what will happen if this happens, because she didn't expect this to happen. You see? So basically what I'm trying to teach here is these things happen. So write a living will, this child of mine will be the one that will take care of my things, or this sister of mine will be the one that will make sure that will have access to my to my accounts or my money or whatever to take care of me. In our instance, friends, for example, we as siblings just decided my sister will be the one that has access to her money and manage my mom's money. I'm the one that manages the taxes. Yeah, and then my other brothers are managing other things. The other one is more good with his hands. He's the one that's managing the home front, ensuring her property is doing well and all those things, and my sister is managing the royalties aspect. You see, this is where now where siblings, you come in together and find out how you can take care of your mom or your parents. Now, but if that doesn't happen, sometimes, especially with not all families get along well or work well together. This is why it's important for you to think about it and write a living will. Advise your parents as well to do the same thing. Mom, dad, in case something happens to you and we need to make decisions on your behalf, please write a living will for what you'd like us to do for you and who would take care of your things, who will be your power of attorney and who are you choosing. And they can give that to a lawyer or they can give that to the high court that will then make a decision for them when they can speak for themselves. Also, there's need for a will for when you pass on. All right, when you pass on, please write a will for in case what will happen when you pass on. What do you want to happen when you pass on? Advise that to your parents as well. If they're still alive and they're still here, please advise your parents to write the will. You don't have to know anything about it. They can just involve a lawyer or they can go to the high court and actually file that living will without you guys knowing what their wishes will be. What I also advise is sometimes just share with your children what your wishes are. As much as you will have written a will, just share with them. Guys, like my mom used to say, guys, now I want to be cremated. She wrote a will, my mother. So we do have an idea what she still wishes anyway. When she dies, she wants to be cremated. She wants this for her house. She wants, she actually mentions it so that even when the will comes, we're not too shocked or something, because then we know, because she actually mentioned, well, guys, now this is what I would want things to happen. Although I have written a will so that it happens exactly the way that I would like it to happen. So please advise your parents, but as well plan for you not to burden your children. All right, so I'm done with my presentation. I hope you feel supported. I hope you know how to achieve your life goals and you feel supported as well with personal finance and you're feeling good about yourself after this presentation. Basically, I just took you into the Suero world. And this is where you can get hold of us. We do help people plan for their lives. Exactly how I've explained to you, this is how I coach my clients, basically. We align your life to the T, and we include the black tax planning. We include your parents in your planning, because this is real. We do have parents. How are we going to plan for them? How can we help our parents plan as well? So this is basically how we help with our coaching, even with our trainings. We include that with our trainings, employee trainings, to ensure that we support our clients as far as possible to the realistic way of living, to the T, especially the African way of living, especially the way that we do things. If you'd like to get hold of me, you can email me at lorato@sueroconsulting.com. That is my contact details there, +267-712-900-70. We do have a Facebook page where I post videos and information about personal finance. It's called Suero Consulting, as well an Instagram page called Suero Consulting. We just recently started a YouTube TV channel called Suero TV. There I interview different experts about different aspects of your life, personal finance, business, investments, property investing will be, sometimes I actually even make presentations about managing your money for your business in there. So check out our YouTube channel called Suero TV. I post different videos in there that will be really helpful for you and your life. I hope you enjoyed this presentation. Thank you. I'm done.
Thank you, Lorato.
Thank you. All right, let me end. All right.
Ladies, this has been So powerful. The two of you are actually an amazing combination, I have to say.
Thank
And
you.
I hope that going forward,
you.
somehow you'll be able to collaborate in future. I'd be so happy to hear that. When I go back to Diana's presentation and then I come back to yours, Lorato, I realize that as Africans, there are quite a few things that hold us back from building wealth and generational wealth.
Mm-hmm.
And the Black tax issue is a very, very serious issue that we need to discuss, because it will literally disrupt all your efforts. All the amazing advice that you've given us here can be thrown out the window. We live in a very, survival driven way. And that's the reason why African parents will literally reach retirement age with very little. We cannot compare ourselves to people in the Western world. Their children leave between 18 and 20. Africans act from the heart, right? So even if your kids are getting older and they should be gone, you find that parents will continue to take care of those kids because we act from the heart. And then you as an adult cannot start saying, well, I'm out of the nest, and so now it's up to them. And Lorato, you brought up a very powerful point. Kids are changing. They're not being raised in as traditional a manner as we were. It's very individualistic. So I would like us to touch on those issues a little bit more, because you see people canceling insurance policies or delaying. I mean, where does the average African parent, especially those who raised us in the 80s and the 70s and the like, where do they get this money to invest when everything that they earn is going towards ensuring their kids are fine? And then suddenly, in their later years, they wake up and they realize, oh, I need to take care of myself. We don't believe in old age homes as Africans. That's the truth.
No,
We really don't.
No.
We don't. And your example, Lorato, thank you for sharing such a heartfelt example. It's really hard to accept the changes that you see sometimes in your parents. Like you see, you and your siblings came together to continue managing mom's issues, her life, everything of hers. Now, where are we going when we realize that kids are going to live their own lives? And yes, you should arrange for home-based care. Who's going to take care of all your issues? So Lorato, before you continue, Diana, I would like to hear from you, especially from the Ugandan perspective, when it comes to issues of extended family. A lot of us have got very large families. I know on my side, I come from polygamous ancestry. You literally have first cousins, tens and dozens of first cousins alone before you even start talking about second cousins. So can you share some of these experiences with us, Diana?
Thank you, Christine. Yes, definitely the issue of Black tax is a challenge in the African setting. And I think from our culture, many of us grew up and we saw our parents and grandparents always help each other out. So it's an African culture to kind of help and support one another. We don't live in a small nucleus family. You live with everybody and support everybody. But I think if I look at the way, if I look at what's happening in Uganda now, definitely you have people who, if you look at your generation or your family, you have a number of people who have gone to school and are highly educated. And then you have another group that is not. And sometimes it creates a dependency, thinking, oh, you went to school, so you need to support us. But I think looking ahead and looking at us, yes, we have a role to play. So there's a reason why we are there and we're in that family. But we need to be careful not to spoon feed people or not to give them the fish, but teach them how to fish. So instead to take on an empowering arm. So if your cousin is saying, oh, I have no money, my children are stuck, can you send me money for school fees? Yes, help, I would already say help, almost as a one-off, because it's an emergency. The child has been sent out of school, they're at home. So help, but more with let me help you this time, but what can you do? What is it that you can do? Can you bake cakes? so that instead of paying school fees, maybe you're actually buying, baking tins or an oven or something, so that they can then learn to sustain themselves. So I think that's the approach that we need to kind of take. Don't take the black tax that I'm going to save the whole village, but keep asking those questions, because you're more educated, you're more exposed, you're more confident. But everybody has a gift and a talent that you can bring out. It's not school, it's not a high school degree, but it's just your knowledge and your confidence and your know-how. Many of our cousins and our relatives can actually do stuff, but they need you to kind of guide them. So I think as those of us who have gone to school, that is our role, and that's what we should do. But also in bringing up our children, you mentioned something about children still being at home. They don't leave when they're 18, and what do we do with that? I think I love the way Asian families do it. Yes, the children still probably live with their parents until they're 40 or whatever, but they're engaged in the business. They're engaged in making the money. They're engaged in seeing where money goes, so that instead of always expecting, I expect mom to feed me, I expect mom to give me, they're also now trying to earn a living as much as they're with their parents. So I think as parents now, many of us are parents now, it's back, the onus is on us to bring up our children, one, to be able to work hard, to be able to contribute and engage them, involve them now. For example, some of my graphics are being done by my children. A simple thing like that. They get onto the software and they do my graphics and flyers, but I'm engaging them to know that, mommy has to work hard in order to keep you going to school. So don't take it for granted. Yeah, so those are the two things that I think, I want to throw back to us, that we're in a position where we need to help and empower and also do better with our own children.
Diana, I just want to follow up on a comment that you made in terms of your observations, right? Especially when we talk about extended family. What are some of the dangers of uncontrolled black tax? Because here you are, maybe you're the most prosperous or one of the most prosperous people in your village or in your family. You still have a heart for everybody. What are some of the dangers of not capping it, continuing to assist?
I think it will drain you. I think you need to assist, but as Lorato said, with a cap. Otherwise, you'll feel drained at the end of it. Yes, when you assist, you feel positive, you've changed lives, you've transformed, but it will drain you as well, because you also still have your obligations, whether it's your family or your own children, or whether it's your retirement. So I think we need to assist within a cap of empowering. I've assisted you this far, now move on or move up. Otherwise, the minute you get people used to handouts, they're used to you sending $100 every month, it just incapacitates them at the end. And you can't blame them because you've spoiled them. So I think set a cap, but also try and empower in all the different ways that we can. See what they have. If they're in the village, do they have land? So say, okay, I'm going to contribute money for seed, or I'm going to contribute money for this and that. And the good thing now with technology, you don't always have to do cash. You can actually get people to deliver. Here we have boda men, or people with bikes. You can send seed or send some cash, but also send things that empower or expose them to different things. So definitely I would say put a cap on it. Otherwise you'll be drained at the end of the period. And when you're in retirement, if you have not managed to save anything, then you too will need support. So you too then will need to benefit from the black tax.
Yes, and we actually need to accept that there will be friction when you cap. I think that's something that we need to remember. Get ready for the comments. They think they've made it, they've forgotten us. They don't know anybody. And what you've said about your own retirement, you find, unfortunately, that some of the most generous people suffer the most, because when it's their time for help, there's nobody there. Before I move to Lorato, Diana, I'd like to know, you mentioned your kids. What are some of the financial habits that you're teaching them now?
So the first one is savings. So definitely savings, putting aside. Yeah, so definitely savings, putting aside money. And normally, so each of them has a piggy bank. At the end of the year, they'll open the piggy bank and there's that excitement of, oh, I've saved. So definitely savings. In terms of how they earn the money that they can save is through chores. So through washing the dogs or cleaning the compound, I will give them something for that. Because most of some of my children are really young. At the same time, I've also taught them how to make jewelry. So they make earrings. Most times I'll be wearing things that they have made. So I go and I buy them beads and I say, you know, make this jewelry because I know it will help them in the future. Even now they sell it to relatives during the Christmas time, but I know it will help them for the future. They know there's something that they can do. So we always try and monetize anything that we can do, teach them different skills, how to make cakes, make earrings, make that, so that they know that they need to work and they need to save. Of course, sometimes it becomes a challenge. You ask them to do something and they ask, am I being paid? But definitely, it's never too young to teach children about how to save, but also how to do business and do chores for money. Yeah.
Thank you, Diana. Lorato, please share some more perspectives with us or insights about how Black tax will interrupt all these plans that we have, retirement planning, insurance, and investments.
Yeah, I mean, it will. It will interrupt everything about, let's say you have plans for your life, you have plans for your family. It will definitely interrupt your plans. And I must stress the importance of needing to be selfish. It's so important to be selfish for your family as well and thinking about yourself first. All right. Like I was saying, that you don't need to be extending to the whole village. There is probably the most important people in your life, and that is your parents. Your siblings, in all honesty, they're not your responsibility. But because we're Africans and that's not how we do things, let's not kill them. Okay, let's empower them. Like I have mentioned, let's empower them to self-sustain themselves. What does kill them mean? Kill them means you just keep them giving money as they ask. You keep giving them money as they want. You know, you offer them a place to live as they want. That's what you call killing them. Rather, if they genuinely don't show, they're genuinely sure that they don't know what to do with their lives, just figure out what they're talented in, and then actually encourage them to go into that area, sponsor them to go to a school in that area they're talented in, you know, technical schools if they're more technical than academical. So rather you empower them in that area, and then you can even open the business yourself under your name, and you make sure you employ them to run it, you know, and you just manage them, so that you say, this, I'm employing you here, I want you to use your skill, I'm going to be paying you every month, you see, so that they get empowered, and they also can be able to self-sustain themselves, build themselves some sort of integrity and a home. You know, another thing that you asked Diana about, how you can deal with these type, you need tough love, guys. Tough love is so necessary. You know, I remember there was a time my mom, when I just graduated, you know, I remember she said to me, I'm just giving you 3 months, girl, 3 months to get out of my house. Please find a job, accumulate whatever that you can, just get your act together. You know, I remember the pressure I was in. I looked, every morning she was just like, oh, are you still here? Can you go and look for the job, because now I want you to go. I remember there was a time, you know, I was telling my husband about it yesterday, that there was a time I needed a toilet paper in one of the bathrooms. You know, she looked at me, can I get to forget, you are still here. You are still here. When are you going? You're busy asking for toilet paper in my house. You know, so yeah, can you just get it going and just go to your house? You know, I'll give you a bed. If you can get you a bed, if you want, you can get a few cutleries, but as you get the job, get the curtains, get everything, just get out. So as much as I found that sometimes a little bit cruel, I mean, asking for toilet paper and the person goes, come to you, are still here. what are you still doing here? It's that kind of pressure is actually really good. You look at it later and you're like, oh, she pressurized me to get it together, made me very uncomfortable in her house, and it's very important because another thing that I noticed is that with parents, we do have a weakness of like, but she's my child, where are they going to go? Oh no, unfortunately, life out there is not like that. So that's why it's important for you to give them tough love. So when life hits them, they know what I know. I've seen this before, and I can handle it because my mom has actually shown me super dust as I was growing. She, as much as she took care of us, but she made sure that she draws the line somewhere because she knows life is not easy. So please get out of my house. I'm giving you this much of time, and she'll make it so uncomfortable for you. She'll come into your room, open the curtains while you're still sleeping. She's like, yeah, no, this is my house. Get your house, girl. I do whatever I want in my house. So this is what I mean that tough love is very necessary. You don't spoil your children. Act with your actions. Every single thing that I do, every single advice that I give with personal finance, I was watching my mom do it. You see, I give a lot of examples with her. So please don't preach to your children. Show them with your actions as well. Show them how you're using your money. Like Diana was saying, involve them in the process that mom is working really hard to pay for your school fees. So they know you have to work for these things. You see, they have to also earn it. So answering your question, Christine, tough love all the way. It will definitely help, burden you financially if you don't draw the lines, if you don't show the tough love, especially with extended family. There will be some shade talk, throw of shade, or yeah, no, she thinks she's made it now. She doesn't think of us. Yeah, no, they can continue talking. You see, when you can only do so much. And I would like to remind you that just because you've raised your children, that was your responsibility. It's not that responsibility to take care of you. It's an African thing, but it's a very burdensome narrative. But like I said, let us, our generation, break that curse. Let's not burden our children. Okay.
Thank you, Lorato. And I just wanted to, bring in what Diana said earlier about the way that Asian families function, and a lot of families function. First of all, the most important thing we need to remember here is tough love and empowerment, because we also don't want to be in a situation where we say to our parents, well, you should have planned and, you should have done this. And you take into account the situation, right? So some people listening to this literally cannot shed the responsibility of the extended family issues and parental issues, and that's okay. The issue is empowerment. Take into account the situation. If the person really can't find a job, how can you support them? If you have kids at home, because Lorato, your example with your mom is brilliant, but she knew that you would fly. You know how birds, eagles start removing some straw and branches from the nest so that the babies get too uncomfortable and they eventually have to fly out. So your mom knew for sure that you were going to be able to fly. If you know that your kids won't be able to fly, what can you do to teach them about accountability, sustainability, financial planning? So the Asian families, you'll all be together, but everybody's responsible. They're doing something, right? If your parents invested everything they had in you, you know that you have that responsibility. Is it possible to empower them? If it's not, like Lorato said, put them on your medical aid. I'm just going to take a look here. We are ending. Chioni says, could it be that Black parents in Africa are less strict with emphasizing that children move out to create a life of their own because they perpetuate and benefit from Black tax? Heavy. Diana and Lorato. Diana, please start.
Sorry, if I got the question right. Sorry, just explain the question again.
So Chioni wants to know whether culturally we allow children to stay home for as long as they want because we're perpetuating this idea of Black tax. So stay home as much as you want because you're going to take care of me.
That's interesting. I don't know. I think sometimes we treat our children with kids' gloves. I don't know why, but I think that's what we have seen. We play our parental roles for a long time, which is okay. But I think we have to learn, as Africans, we also have to learn to just empower and let them go. The example you gave of the bird is excellent, because many times you'll find people at home, they're home staying with their parents and they're not contributing. So I think it's important for just empower, let go. And the issue of thinking your child then will support you, not if they've been in your house for so long. If they've been in your house for so long, they're they're very likely to depend on you instead, you know, as opposed to you supporting them. So I think it's just something that we have to keep telling ourselves, to get into the spirit of let's empower, let's support, but in an empowering way. Otherwise, it's going to be a challenge. But I also strongly believe that if your child is staying with you, then you also need to have the dialogue with them in terms of what's your plan, what can you do, where do you want to go. I think that's something that is new to us as Africans, to begin having that honest dialogue, you know, because you'll find two people are staying in the same house, but we're not talking. So I don't know what your challenges are, why you're not leaving, what are your fears, you know, are you applying for a job? Do you know how to write a CV? So I think also opening up that dialogue and beginning to speak to and understand our children is important. It's a new parenting.
New parenting. And Diana, you've made a good point. I mean, even with visitors, we don't ask, how long are you staying? This is a cultural thing. So it's hard.
This is so true.
Lorato.
This is so true. I mean, I remember my father-in-law once said to me, you know, in the African culture, you just see your uncle come.
And, exactly.
You know, just land, you know,
just
and you ask them, for how long are you going to be? Like, you're chasing me.
Are you chasing us? Hey.
You know, so, but yes, no, but with I think that's a different one altogether. But now we have this guy, when he's asking, for could it be that also we are encouraging it, and as African parents, I mean, I've seen African parents overdoing the love. You know, you're right about, we're very caring. Well, we overdo the love. No, I'm supporting my child, but now we're not drawing the line. Support and encouraging or killing. The support can really kill the kids. You know, then they're not able to think for themselves. All you're doing is feeding them, thinking for them, everything. You're not like you're saying, what the kids are different. You're not chasing them out to go fly or whatever, but you need to hold them accountable. You need to show them accountability. You need to show them, teach them how to think for themselves, you know, because it really happened. And it can really be bad, because even when you die tomorrow as a parent, you've just left these kids who were dependent on you with everything in terms of thinking. They were living in your house. Now they're not even able to maintain your house because you didn't teach them any life skills. You didn't teach them any skills for them to be able to be self-sustainable for themselves. So yes, there is some sort of complacency with some families there that we really need to be careful with, that we don't kill our children thinking they will do some black checks anyway. And the black checks, like you're saying, it won't even happen because they'll be there dependent on you. That means they're not growing. They're going to actually be a burden to you as a parent as well, because it becomes too much. As a parent, when you want to enjoy your retirement, you know, you should be a parent now that's looking forward to grandchildren. You just, you know, your problems as a retired parent should be, when are you bringing the grandchildren home? You know, those should be your problems. When are you guys visiting? That should be your problems, not when are you guys giving me money? I can't eat, I can't, you know, and all that. So yes, we do have a contribution to a certain extent of not empowering. Now, the difference with Indians and the Asian culture is that as much as they have that system of all living together, they are involved in business making. They are involved in thinking for themselves. They actually teach them how to be very assertive. I mean, I had an employee that was Indian once, and she used to just tell me how they do it and how her father encourages her. And that child was the most focused as compared to my other employees that were from here. You know, that child was the one, the go-getter, the ideas one, you see how they've raised them, but they still all live together in one house. And this child has this sharp and go-getting attitude. So it's exactly how do we draw the line between killing our kids and actually teaching them to be assertive and going out to the world. It doesn't have to be the way my mom did it and just threw me out. You know, some kids don't respond well to that. How can you do it? Understand your children, but we have to still, I encourage independence. We have to encourage assertiveness and, you know, optimism and self-sustainability.
Thank you, Lorato. We have 5 minutes left. I would like us to just wrap up. Diana, if you have any comments on this question that Lorato answered from Chioni, which said, what is the difference between Black Africans and Indians that live in close communities throughout their lives and still create generational wealth? How does this model not work for Black Africans? Do you have anything to say about that?
Yeah, I think Lorato has answered it, but maybe just to add on, it's the issue of empowering, it's the issue of getting the child involved. So the Asian family, as she said, is actually getting the child to have a responsibility. They're not doing it for them. So, you know, as a mother with my child and my cousins or whatever, I'm not doing all the work, but the work is actually divided. And I think we have to it's something about learning to let go and to delegate. We need to learn how to do that, because it's the same with African businesses. You'll find, you know, someone will set up a great business and it's really good, but the minute the founder dies, that's it. It's gone. You'll never hear about it again. And yet the Asian businesses, most of them running now, it's the grandchildren that are running it. So that empowering and delegating and trusting people, you know, don't think you're the smartest person in your crop, but actually try and build someone who can do exactly what you're doing, you know. So even us who are speaking now, next year, each of us should have a young person by our side who can speak and who can talk and who, so we don't say, okay, phenomenal women, gone, secure the bag, gone, you know, but we've empowered and built up capacity. So that's the importance, I think, with the mentoring programs that many of us are running now. Just empower people and give them the same knowledge that you have, pass it down. Yeah,
thank you, Diana. I also want to mention, I mean, also having grown up around a lot of Asian families, I think that Africans too have an issue with loyalty. Just even within the families, I think we need to work on that. We do have this tendency to pull each other down. You employ relatives, you end up destroying the family relationship because we don't want each other to win. We're full of jealousy. And I find that other cultures do tend to fiercely guard family assets. That's something that we really need to work on. I want to give a shout out to everybody who's joined us today, people from Kenya, Uganda, Botswana, Namibia, South Africa, Swaziland. I see one more question here. One more that we're going to answer, because we do need to close it down. And you know, I've noticed something, ladies. This is actually our 13th session in this series. And I find that a lot of times when the information is so impactful and it hits people, there are fewer questions. People are literally just shook. So well done. Thank you, ladies. Very last question. I know people are warming up now, but now we need to start closing it down. Helen wants to know, what are the benefits of having two pension funds, one at an employer and one personal one? Perhaps, Lorato, you could start.
Yeah. Oh, that is very beneficial. I actually encourage it. Very, very smart move, because that means when you retire, you will have two streams of income. You will have one from the employer and you will have one from this individual one. So that is a brilliant concept. If you can even have five, do five. Why not? You know, but I always encourage that also have other investments, invest in property, invest in compound interest, save investments account, so that when you're actually retired and chilling, money just keeps coming in. You know, you don't need to be worried about that. Your worry, like I said, should be, when are the grandkids coming? That's should be your worry. Maybe I should go to Paris? I don't know, you know, whatever. It just should be your worries. what it shouldn't be anything else. So that's a brilliant concept. I encourage it all the way.
Thank you, Lorato. Diana, any comments on multiple policies, multiple funds?
I think as long as you can afford to have the deductions, because of course the pension is being deducted from your salary and all that. So as long as you can afford to have the deductions, that's excellent. It's more money for you. And then if you look at when you can cash some of those in, those would differ. So you might find with your employer, you can actually cash your pension when you leave. You know, they keep it for you until a certain age. So that's an advantage for you in terms of you can cash that in and then invest it in a business or in something else. So there's no problem with having to.
Right. Thank you so much. Ladies, for everyone who's watching, I just want to remind you to check out both Lorato and Diana online. The main reason that I started Secure the Bag Africa is we have so much information. I mean, even what we're talking about now, investments, retirement planning, insurance, there are a lot of speakers internationally that you can find, even on YouTube. We do not have enough African voices. We do not have enough people with expertise like our two guests today who can talk about the issues we're discussing in an African context. I want to be realistic. I know that a lot of people are burdened with family issues. We're not saying wake up tomorrow morning and tell them that you're done. But what we are saying is that you do need to work on empowerment, and that starts with yourself. How can you create multiple streams of income? How can you save more? How can you take care of yourself? And I definitely want to let you know, you need to join communities of like-minded people. Lorato has told us about her YouTube channel, her YouTube TV channel that I have watched as well. She brings together thought leaders, captains of industry, people who have the expertise. The information is there. Please follow this page. Diana has a mastermind, and it's very important that you get yourself a coach. Get yourself somebody who's willing to spend time with you and help you along your way, because you have your own issues. Don't sit with your problems. Don't just look for generic solutions. Talk to somebody who has the expertise and can understand your context. All of us here understand the African context. We understand that you do have responsibilities you cannot run away from. But the truth of the matter is that when you are in your elder years, we can only offer our sympathy, right? So Lorato and Diana, thank you so much. We are ending the series on a very high note. I would invite everybody to just check out the very first session that they had last month. It was very powerful. I want to thank you both so much for sharing your gift. You are saving lives. You don't know how much power there is in sharing your gift and helping people to unlock their gifts. The work with Phenomenal Women Global, I'd love to commend you for it. I know that we have quite a few people watching from Phenomenal Women Global. These are African women all over the globe. Again, Suero Consulting, thank you so much for the work that you do.
Thank you.
Empowering Africans, both women and men. Let's get that bag, guys. Thank you so much for joining us. Watch again to get their contact details, and let's keep in touch.
Thank you.
Thank you.
Thank you.
Thanks so much.